Hi! The perfect entryway for beginners to enter stock market is to choose IPOs. And one of our key takeaways from the year 2020 is to maintain good financial fitness. In fact, the benchmark indices have grown more than 80% after they bottomed out last year in the month of March, and several stocks grew multifold, with some even growing as much as 70 times and beyond. These days, we get to hear a lot about IPO announcements by certain companies. But how do we proceed with that, and what should be your strategy? In this video, I'll be covering all the basic details of IPOs that you must know. Initial public offering, popularly known as IPO, takes place when a company needs to raise money. This fundraising could be for anything from business expansion to other strategic initiatives. So when a company decides to raise funds, it releases some of its shares for public to invest, which are purchased at an issued price. After the decision to go public, the company first hires an investment bank to handle the IPO before it becomes public. Then the investment bank and the company works out the financial details of the IPO in the underwriting agreement. The company shares all these details in its draft red herring prospectus, which is DRHP, and this is an initial registration document submitted to the market regulators, the Securities and Exchange Board of India. The DRHP contains everything right from the company's financial standing and business prospects to its liabilities and the reason why it wants to raise the money. Any interested investor can just go through these and choose to participate in an IPO accordingly. If you are a new investor, you may find all these jargons around the initial public offering to be a little baffling. To clear all of it and to learn the terms, check out the videos in this channel under the playlist 1 Minute Literacy. You can also access it by clicking on the I button above, and stay tuned with me by subscribing to this channel so you shall receive notification of the stock videos when it is uploaded. There are two major categories of IPOs offered by companies. One is fixed price offering. This is pretty straightforward. The company announces the price of the initial public offering in advance. So when you partake in a fixed price IPO, you agree to pay in full. The second type is book building offering. In this type, the stock price is offered in a 20% band, and interested investors can start placing their bids. The lower limit of the price band in the bidding is called as the floor price, and the upper limit is called cap price. Investors bid for the number of shares and the price they wish to pay. It helps the company to analyze the investors' interest for that specific IPO among the investors before the final price is declared. IPOs are generally looked upon by investors with two investment horizons, with a short-term and a long-term perspective. Though there are incentives in the short term, any new investor should focus on the bigger picture with a long-term outlook. But how good are IPOs? Only data speaks volumes in this regard. In the past 6 months, a total of more than 10 IPOs were launched in India, and some of the recent ones include Antony Waste Handling Cell, Mrs. Bector's Food Specialties, Burger King India, and Gland Pharma. Gland Pharma started off with an issued price of Rs 1,500 and later traded at more than Rs 2,400. And Burger King, with issued price of Rs 60, traded at over Rs 170. Also, Mrs. Bector's Food Specialities, with issued price of 288 rupees, went more than Rs 500. You should not just go ahead and put your money straight away in an IPO without doing a proper analysis. It is because there is also a flip side to it. For instance, Netflix Shorts Digital Media with issue price of Rs 30 had delivered zero returns to its investors and was being traded only around Rs 30. Similarly, Bodhi3 Multimedia with issue price of Rs 95 had corrected to Rs 77.50 even after it peaked to Rs 96. What should you do then? If you are completely new to the stock market, just make sure that you read as much as possible on the upcoming IPOs. Learn to study Draft Red Herring Prospectus (DRHP). You must completely understand the business model of a company that you are planning to invest in. DRHP in this case should be your Bible. You must also check the subscription rate on the second day of an IPO. If the subscription is good, it is likely to deliver great returns. A good subscription means that the IPO has either been oversubscribed or is in the verge of getting oversubscribed. This practice will help you graduate to the equity market with a strong understanding of the fundamentals. In reality, the price action of an IPO is relatively easy to understand than the already listed stocks. You will be able to identify what factors work in a company's favor and differentiate between the true value and the speculation. If you have purchased an IPO of a company, you are exposed to the fortunes of that company. You bear a direct impact on its success and the losses. It is this asset of your portfolio which has the highest potential to reward the returns. On the flip side, it can sink your investment without a sign. Remember, stocks are subjected to the volatility of the markets. You should know that a company which offers its shares to the public is not indebted to reimburse the capital to the public investors. You should weigh up your potential risks and rewards before investing in an IPO. If you are a novice, read up an account from an expert or a wealth management firm. But always remember, stock markets around the world have only grown and breached previous all-time highs even after the most rigorous financial overhauls. It is only logical to join them now and make IPO investments as a part of your investment. The sooner, the better. Don't forget to check out the next video to get notified about the upcoming IPOs of the year 2021.